What's up guys, welcome to the door number 14 of the finance calendar, where we dive into 24 financial ratios in 24 days. Don't forget to subscribe so you don't miss any of the ratios, and let's go! For the past couple of days we have been talking about ratios that tell us how well the company is prepared for short-term obligations. Today we are going to move on to the debt to equity ratio, which tells us the company's total debt compared to its shareholder equity. It is calculated by dividing the total debt by the total shareholders' equity. Let's take a look at an example. To calculate the debt to equity ratio, you will need the company's balance sheet. Intel has listed their stockholders' equity separately, and it is $90.1 billion. You can also calculate it by yourself. It is simply total assets minus total liabilities. Total debt can also be found from the balance sheet. For Intel, it is $35.61 billion. This means that Intel's debt to equity ratio is 39.5%. Some companies don't directly show their total debt on the balance sheet, but you can calculate it by adding up all the short-term and long-term debts. So what does the debt to equity ratio tell us? It tells us how much leverage a company is using, aka it tells us how much of its operations the company is financing with debt. If the debt to equity ratio is negative, it means that the company has a negative shareholders' equity, aka more liabilities than assets. Intel's debt to equity ratio of 39.5% means that for every $1 of equity, they have 39.5 cents of debt. The debt to equity ratio tells us how well the shareholders' equity can pay off debt if the company stops operating. You can use the debt to equity ratio to compare different companies. Companies that have a very high debt to equity ratio can be high-risk investments since they are using a lot of leverage to finance their operations. However, companies with very low debt to equity ratios can also be bad investments since they might not be using leverage efficiently. Because of this, you should compare the company's debt to equity ratio to its whole industry's average. As always, use all the available information and ratios before making investment decisions. That's it for today's financial ratio. Hit the like button if you found this video helpful and subscribe so you don't miss the future ratios. Have a great day and I'll see you tomorrow. Bye!